Hello everyone, welcome back to my channel. I'm your host Miss KK and this is The Wave. So today I'm back with yet another video and we are talking about payslips. So last week we spoke about bonuses and we also shared some ideas of what other people did with their bonuses in a hope to inspire you on spending your next bonus wisely. And I remember earlier this year when I was doing our tax educational series, someone actually asked me and said that they don't understand why it is that at the end of each year, they have to top up or pay additional money to the receiver of revenue, despite the fact that they don't have additional income outside employment. So I then asked that person if they can please share their pay slips. Maybe there's some bit of salary structuring that they are doing that is actually triggering this additional tax liability. And to my surprise, they had quite a huge amount of travel allowance. So I asked them if they are required to travel frequently with work or why they have an additional travel allowance, because when I saw the income tax return, it wasn't reducing that travel allowance with anything, and that's why the receiver was actually taxing the travel allowance. And for them to tell me that no, that it was just a tax structuring that they were told to put a portion of their salary to travel allowance so that they can pay less tax. And I was so surprised because unless you're required to travel with work, that travel allowance will trigger a tax expense at the end of the year and you're going to be out of pocket because you need to top up every time because you don't have any expenses that are going to be reducing that travel allowance. So I just want to explain here in high level how travel allowance works so that you can understand why it was wrong for that person to actually put a portion of their salary to travel allowance if they're not required to travel with work. So travel allowance is supposed to compensate you for any business travel that you go on, so that if you are to spend things like petrol and you spend things like service of your car, you can deduct the cost of those expenses from the travel allowance that the company is giving you, so that at the end of the day you don't get taxed on that because you got that money but you spend it on business related travel. That's why it's not taxed. So your employer then doesn't withhold pay as you earn on this amount during the year, but comes at the end of the year, the onus is on you as a taxpayer to prove that you indeed travel for business purposes, keep receipts of those business related expenditure, and then reduce that travel allowance, and hopefully the actual expenses that you incur would equal your travel allowance. And if it's more, you actually you top up less than what someone would have topped up if they don't have expenses at all. And that conversation actually made me realize that people have things on their payslips that don't understand the implication thereof. And today I just want to highlight a few things that I find on payslips that you need to understand how they work and how you can actually structure it to be in your best interest and not necessarily to just pay less tax. So the first thing that I want to discuss here is medical aid. So for a lot of us, our employer make it as a mandatory condition of employment that we belong to a medical aid. And because it's a group scheme, we don't normally have a choice of which medical aid to belong to. We are just told we at this particular company are part of, NMC, Bank Med, or whatever the other options are. You need to join this medical aid. And I want you to realize that you normally only have a choice of what option to join. There are various medical aid options within a scheme, so they can tell you maybe you might join Ruby, for example. On NMC you can join Ruby, or you can join a higher option, or you can join a lower option. But in this video we're not going to really be discussing what options is best to join in terms of medical aid, but I just want to highlight that you do have a choice of what option to join. The other choice you might have, though, the company might make it a mandatory condition of employment that you belong to a medical aid, but it doesn't mean that you need to belong to their medical aid. You could be a beneficiary on someone else's medical aid. So take a typical example. If you are married and your husband has medical aid at work, and it's cheaper for you to be a beneficiary on your husband or your spouse's medical aid instead of you individually joining. So if that's the case, you could request that other medical aid to give you a letter that you're already a member of that medical aid by virtue of you being a beneficiary on your spouse's medical aid, and therefore your employer can't force you to join another medical aid. So that is the option that I wanted you to be aware of when it comes to medical aid and your payslip. The second thing that I want you to be aware of is pension fund or provident fund. And in here, I want you to understand that sometimes companies may contribute towards a pension fund or a provident fund on your behalf. Companies might contribute by matching your contribution towards that pension or provident fund, but sometimes it's just a salary structuring where they can pay you 20,000. What you do with that 20,000 is irrelevant. You can decide to contribute a portion of that to a pension fund. So what I want you to understand here is, if the company is matching your contribution that you are making. So say, for example, the company says, if you contribute 6%, we are going to add 3%, or if you contribute 6%, we are going to top up 6%. So in that instance, you are actually benefiting from your employer topping up over and above what you are contributing. But sometimes the companies then say, no, you need to contribute on your own, but we are going to treat it as a company contribution. In that case, you need to assess whether it's beneficial for you to contribute a certain amount and only contribute towards what you can realistically afford. And most of the time, they also give you options to say you can join this at 15%, 20%, 5%. So whether your company is topping up or you are contributing from your own money would influence how much you contribute. So I want you to be aware of that, because a lot of us, we just hear, no, my company contributes to pension fund or provident fund, but we don't understand whether it's a company contribution or it's an employee contribution, and you are contributing excessively when you could be using your money with something else. The other thing that I want to discuss in this video is bonuses. Yes, we did speak about bonuses last week, but it was more from a perspective of what people did with their bonuses. So this week, I want us to discuss the type of bonus scheme your employer might have. They are almost like sort of like 3 bonus schemes in the market. So there is the 13th check, which is guaranteed that you're going to get an additional, there will be a month where you're going to get double your salary. This 13th check, though, it is normally paid, some people are paid on your birthday, like, you know, the government, or they paid in December when the office is closing, or they paid within your year end. So here the uncertainty is when you get it, but you know you are going to be getting an additional income at some stage. There are other companies that pay performance related bonuses. They will have key performance indicators, sometimes called KPIs, and they will say, if we meet X, Y, and Z, we will pay out a bonus, and they will have an approved scheme to say, if the company performs like this, this is how much you will calculate as a bonus. If the company performs like this, this is how much we are going to perform as a bonus, or we are going to pay out as a bonus. So if you work for a company that gives performance related bonuses, then you know you're not guaranteed to get a bonus all the time, but if the company meets the results, you're going to be able to get a bonus. And these performance related bonus schemes are normally paid quarterly, or they paid half yearly, or they paid yearly. So you also need to understand how your employer pays this bonus in order for you to enable your budgeting process. The third thing that I've seen some companies do is employees are allowed to structure their salary to enable them to get a bonus of some sort. So what they can say is, look, we pay you 20,000. What you do with that 20,000 is up to you. The employees can then come to their employer and say, look, I would like you to withhold 1,000 of my salary every month and pay to me in December as a bonus. So that is you just deferring a portion of your salary and getting it at the end of the year as a bonus. So if someone is structuring their salary like that, on a monthly basis, they get a lower net income, and throughout the year, they're spending less. But at least in December, or whenever they choose to get that 13th check that they've created for themselves, then they are going to have more money in that month. And if they need to maybe cater for other once-off expenses, they can then use that. So up to you is to figure out which scheme your employer uses. And if the employer doesn't have a 13th check or doesn't have a performance-related bonus, ask if they are open to structuring your salary such that you get a portion of it in a lump sum at a specific month, so that you can create that incentive for yourself, so that you have some money at some stage to spend at once. And lastly, I would like to speak about group life covers. Group life covers are normally also a condition of employment where your employer says that for as long as you work for us, we expect you to form part of this group life cover. And this group life cover can extend to, funeral benefit and life payout post you passing away, and it can extend to your children, and it can also extend to your spouse. So what I expect you to do here is find out if your employer has a group life cover, find out what the contributions are, and find out whether your spouse or your kids are eligible to be part of this group life cover. And just like medical aid, group life cover tends to be affordable because, again, you are joining as a group. The risk is cross-subsidized by various risk profiles of the members within the group. So unlike if you were to join a group life life cover on your own, you probably pay a higher premium, but if you join as a group, you are probably going to pay a lower premium. But the unfortunate part about group life cover, just like pension fund, is that it's a condition of employment. When you cease to be employed by that employer, you unfortunately have to leave the group life scheme. But unlike pension, where you get your money when you leave, group is ensuring a death, and when you leave your employer, you have resigned. The insured event, meaning you dying, hasn't happened, and therefore you don't get anything out of it. But there are options to convert your group life cover to an individual life cover, and I've done a video on that. So I only wanted to speak about these few things in this video, but I want to bring to light that there are various aspects of your payslip that you need to understand so that you can make an informed decision. And most companies will give you an opportunity to review your salary and structuring per once a year, and they will say that if you have any changes that you want to make, please come forth and they will make the changes. So there are other aspects that I won't discuss in this video that are also common on payslips, things like housing subsidies, things like annual leave days. That's normally per your company policy, regulated in terms of the Labor Act. There may also be severance pay on your payslip if there is anything of some such at your employer. There may be social security contribution. There may also be social clubs money contribution from your payslip. So I want you to be cognizant of the various aspects on your payslip so that when you are negotiating your next salary, when you are restructuring your current salary, when the review is up, you really are informed of what you are doing. So do let us know in the comment section below what aspect of your payslip don't you understand. Maybe we can do a video on that. Or what aspects of your payslip that is there that you really would prefer not to be there, or just leave us a comment of how you found this video. Until next time, it is goodbye, and please let's continue to learn, grow, and evolve together.